Joining us to give us a little more clarity on the statement out of ICASA today. You are now accepting the proposals being put forward to you by the mobile operators, and I have to assume it's because they've taken out that clause preventing you from ruling further on these interconnect fees until 2013. That was the big sticking point previously, wasn't it?
That's correct, Brannin. On Tuesday evening, that's when we received the revised interconnection agreements from the three operators. And yesterday, without any hesitation, the authority applied its mind to the revised interconnection agreements. And what came out clearly was that the precondition which was contained in the initial agreement was no more. And that paved the way for the authority to actually review and approve the agreements as filed. It should be stated very clearly that we welcome any decrease in the costs of communications in the country. And the issue of the precondition was really the sticking point which prevents us from approving the agreement.
1st of March 2010, we're now going to see interconnection fees coming down to 89 cents at peak time. That's from that R1.25 level previously, although your normal peak, your normal hours, what will be at 77 cents, remain at 77 cents. Are you expecting to investigate this further? Is this just the first move in putting further pressure on interconnect fees?
Well, I should inform your viewers that the authority has already embarked on a process outlined in law, the Electronic Communications Act, to look at competition matters within the wholesale market of the communications industry. And by now we have already defined this market, what constitutes the wholesale market invoice. We have identified significant market players in the market, and we have to determine if this market is competitive. If it's not competitive, what competitive measures need to be brought to bear? And then from there, by next month, we'll be coming up with the draft regulations, which will take out to the public and stakeholders for input and a round of consultation. Thereafter, we'll finalize the regulations by June and come up with a whole range of regulations governing the wholesale market invoice.
There are those detractors saying, why so much focus on the interconnect fees? Because ultimately it's not going to help the retail tariff for the end consumer. Do you think this is going to filter through to some relief on the consumer front?
Definitely everything should filter through. We're looking at the wholesale market at this point in time, and interconnection rate is just one of them. There is a whole issue of facilities leasing, whereby some operators don't have infrastructure and they have to lease infrastructure from the incumbents. So the leasing arrangements should also be fair and non-discriminatory. So we have to look at a whole range of wholesale issues and to make sure that there's competition in that market. And then ultimately, everything should filter down to the consumers and to the subscribers.
Juby, good having you on the show this afternoon. Thank you very much. That was Juby Matlu from ICASA. Let's come back to the telecommunications stocks, James. And there obviously was, I'm sure the CEOs of the mobile operators are all heaving a huge sigh of relief right now, because it looked as though ICASA was going to go hard on the interconnect fees. And we're seeing them at 89 cents, which is what the mobile operators have at this stage proposed. Going back to what Peter Ace, the CEO of Vodacom, said recently, that for every 10% reduction in interconnect fees, we would see 200 million rand coming off the bottom line. Is this now, in your opinion, a fair deal?
Well, look, when you have a regulated price like this, it's always extremely difficult to get it right. And for the regulator to get it right, is very, very tough, because they're going to be pulled in two opposite directions. You want to ensure a fair deal for the consumer, you've got to ensure a competitive environment, and you have to ensure that the operators can in fact operate. CEOs will always scream that they've been ripped off and that it's going to result in big decreases to the bottom line, and we wouldn't expect anything different from them. Assuming we have a competitive environment, and I believe we do in South Africa have a competitive environment, we should see some of those reductions passed on to the consumer, and that should have an impact on the bottom line. But that's very much going to be across the board in terms of all the telecom providers.
I recently spoke to Sam Hooley, Head of Equities at Investec Asset Management South Africa, and he's betting on the telecom stocks, the likes of MTN and Vodacom, saying that they've lagged the recovery that we've seen in the rest of the market, and they're priced for disaster. Literally, we're seeing all the issues coming to the fore around MTN in Nigeria, and a similar scenario to Rika unfolding. We've got Vodacom with issues in the DRC, although it's not a big contributor to the bottom line. It still may be indicative of what's going to happen or unfold on the African continent as they pursue that territory. And secondly, the saturation levels for Vodacom in South Africa, given the fact that we are highly penetrated in the mobile space. There's also the argument that they've been ex-growth, and they are ex-growth. It's a sunset industry. Do you side with Sam Hooley on this one? He says they can cut costs. We haven't taken that into account. And they can also pull down huge capex spend, which they have factored in as a result of anticipating much higher growth. But those two factors ultimately should impact them positively.
Right. Certainly there's been a confluence of negative factors which has resulted in underperformance of the share prices. But you have to remember what these companies do and what they do well. I'm a big proponent of South African companies expanding into other emerging markets and using that expertise in those markets. So if you believe that the telecom companies are going to remain South Africa bound, focusing on South African consumers, then yes, you could adopt the point of view that they may go ex-growth. But I don't believe that is their strategy at all. Their strategy is emerging markets growth. The big European operators will look to capture that growth through local knowledge. And the South African operators are extremely well placed for that. And once we see a bit of normality return one day to the credit markets, the appetite for corporate activity remains. And but on that basis, I would remain firmly invested in those stocks.